All right, good morning. Happy what day is it? Hang on, let me pull up the chat. I believe it's a Friday. Is it Friday or Thursday? I don't even know anymore. Where's it going? Where's my phone? I don't even have the phone. All right, looks like I got chat. All right, good. Hang on, got to get that over there. All right. Welcome. Yeah, Friday the 20th. That sounds like a lucky day. My lucky day to be with you. Good morning, everyone. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Namaste. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. We are a boutique foreign exchange trading firm, and I'm here to earn your loyalty and respect. I will cover technical and fundamental analysis with the overriding goal of helping you put together trade plans, but also, most importantly, becoming an independent, consistently profitable trader. And if you learn anything or enjoy anything in today's webinar, I hope you show that loyalty and respect by visiting TradersWay.com and opening up an account. Even if it's a demo account, you get to test out our execution speed, our competitive spreads. If you'd rather use an ECN model, we can offer that to you as well. And of course, world-class customer service. So anyways, once again, my name is Wayne McDonald. It's really nice to meet you. I've been trading Forex for 14, 15 years, somewhere in there. Saw a commercial, cold brew coffee with the foam milk on top, and I'm like, that's what I want. So that's what I made. All right. So Ian, Martin, Joe, good to see everybody. All right, so here's the rules of engagement. You're the boss. I am just a humble currency analyst. Gross. My dog's dog food, our dog food had ants in them this morning, and so I cleaned that up really quickly, but now I feel like it got ants all over me. I'm like, oh my God, there's ants everywhere. Not typically something we have in our home. Anyways, you're the boss. I'm a humble currency analyst, so feel free to ask questions. If you want me to cover a certain currency pair, a certain trading strategy, if you just have questions like, what was this, or can you expand on that, just ask in the chat here, and I'd be happy to do so. So let us be going. Hang on, I want to check one thing while we're here. Wasn't sure if that scrolling message is out of date. Does it say anything? Nope, nothing specific. Okay, cool. Cool. Sometimes there's a date on there or something. All right. Well, let us be going now. Let me get my glasses just in case I need my glasses over here. All right, let's start up here in Aussie. We trapped this in a range, I think on Tuesday. We're still in that range. You can see we missed the top of the range by 6 pips. This bottom producing this top, producing that top, producing that top, producing that top, almost this top. So like if I move it down to this week's high, you know, it's still right in there. But unfortunately, we missed it by 6 pips. Might have had something to do with that big psychological level, right? But anyways, a buyer down here would be a seller up here. And then the way I handle ranges is that I assume they're going to hold. This range will hold, meaning resistance will not break, support will not break forever. This will move sideways forever and ever and ever and ever and ever and ever until it breaks. then when or if it breaks, but let's say next week is like this, okay? We get through the top, let's say on Monday or Tuesday. I would assume a move kind of like this later in the week or the next week. That's how I would trade that. And the exact same thing, if it breaks to the bottom, I would expect a break of the bottom, a retrace, what I call a roll reversal, and then the extension. So break, retrace, extension. That's how I would trade it. Okay, so we're still stuck in that middle. Pig dog, let me clean this up. I have a big range in here, and let's go all the way back. And I was talking about sort of this consolidation area, whether it's here, maybe you want to break it here, okay? Would you agree? Support, support, resistance, support, support, support. That this could or should be respected one way or the other. Even if it breaks, it should be respected. Okay, so now let's go back into like a 1 hour. We're kind of in that mode now. The point that the thing I'd like to point out now is this area. That's the projected bottom for the week, this week. So here it is. The bottom produced let me give it a couple clicks here. Okay, there we go. Okay, so this is what, a Thursday bottom. Okay, it's supposed to bottom. Another way of saying it is if you shorted, you should be taking profit. You should have really on Wednesday taken profit here because of the cluster. You're in the middle of the pivot profit zone for this week, so you're in the weekly target. But there's also a monthly pivot here, and you can see it came down. That's really where you should have taken profit. This second move here, it's much less predictable. Nonetheless, it did it, and then it came down and it hit the S2 support 2 pivot on a weekly basis. You should 100% of the time take profit on that, okay, as a bear. Now, as a bull, you're thinking, well, maybe I could counter trend trade that. Maybe. Usually not what you should be doing because it's a counter trend. If it happened earlier in the week, maybe, but you know, Thursday or Friday is not early in the week. So no, you should have just taken Friday off work, right? You should have taken your money off the table here and then enjoyed a long weekend. The interesting thing about that is this top that occurred on Monday predicts this move down into this green zone here. So mission complete. Is the market maker real? Not really in Forex. I'm not sure what you mean by a market maker. Usually that's something that a bank would do with the liquid assets on behalf of a client, but it's pretty old school. Okay, anyways. Like no one has to make a market for the US dollar. No one has to make a market for the Great British Pound. They're liquid, especially in Forex. I mean, it's cash. It's cash. You know, if you're looking for like a Botswana currency or something that you need to hedge, maybe, but no. So I'm not sure the question here about market maker. Okay. Anyways, that's kind of an interesting move. Game over, done. Nice. Okay. Next thing you want to consider is what are you going to do next week on this pair? If you're going to be a bull, the interesting thing is somewhere on Friday or Monday, you can start front running. The monthly pivot I'm looking at, like the way I'm looking at this entire chart here, and it doesn't suggest a reversal. It doesn't suggest bullishness. So maybe there's short-term bullishness. selling, I think, is easier on this one. Maybe not today, but again, between now and Tuesday, you'd probably get a chance. The first chance is this area here. I would have to expand this to catch the monthly pivot. Okay, so a bull could drive it up to here, but you're going to face massive selling. Okay, there's going to be massive sell orders up in there. You know, to become a bull on this, I think what would happen if you were that bullish is maybe it drives itself up into here, moves sideways for a week, and then 2 weeks from now it makes a rally to the upside. That's harder to digest, in my opinion. Okay, it's only the 20th. Like, it's kind of early even to front run August. Is this webinar live? Yes, it is live. Okay. Roll reversal around 131. Well, I can't even see 131. Yeah, for a sell. Yeah, well, that's what I have here. Yeah, this is 131. Okay. I was looking at, like, could we front run August's move now? I think we're about a week early. No, especially third week of July. I don't know. Kind of seems kind of early to front run next month's pivots. Cool. Let's go on to gold. Okay. We've talked about this, how the only thing gold has told me is, when I'm looking at the specifically the overlap of weekly and monthly pivots, is it didn't tell me much of anything. Things could have or should have moved in back here, but they didn't. And even then, it was a hope and a prayer, because on a monthly basis, it just was gobbledygook. It said nothing. So the only thing you could have hoped for here, as I explained earlier in the week, is like maybe a double bottom, but of course you can see it didn't occur. What was much more clear, because none of that is a real entry. I mean, it was possible. This was a pretty big maybe for a Monday or a Tuesday, but that didn't happen, right? So that's long gone. The support is easier to see. So we know this area here is the predicted bottom for this week. We knew that way up in here. The interesting, or let's say even more interesting, or maybe icing on the cake kind of stuff, is this is the predicted bottom for the month of July. And when you take the conservative bottom for July and overlap that with the aggressive target for this week, the third week of July, you get that. Okay? And that's a pretty strong bottom, right? The predicted bottom for this week, the predicted bottom for this month, overlap the two, and that might be good enough. To resell this, like, let's say you're a bear and you've been selling this hard for months now, right? It's not that I disagree with you fundamentally. Technically now, you might do things like sell this 21, because that's what the EMAs are for, right? And you would have sold the 21 back here, you would have sold the 21 here, you would have sold the 21 here, even here. So you keep doing that forever, right? No. There's information on this chart that says, even though it worked maybe 7 times in a row, the probability of it failing this time is dramatically higher than previous times because of this cluster. So if you were a bear to sell here, I don't know, maybe 1234 next week. I don't think you're going to get that today. but if it's spiked up, maybe you could do that way up in here. But kind of like the other pair, what was it, pound dollar or Aussie dollar? Like one of the pairs we just covered. You know, maybe yesterday you should have just taken your profit and walked away. And what was that? Was that what I said yesterday in yesterday's webinar? I think it is, right? Like you should just take your profit and be done. Like you should, the only thing it tells you to do is stop selling. It certainly doesn't tell you to buy. You certainly cannot sell. So the message here is take your profit and be done. Yeah, oh, Mike makes a, Mike makes a point here. Very often, or most of the time I do webinars on Click Meeting. Every so often I do them live on YouTube. So make sure you subscribe to the Forex.Today YouTube channel, and then you click on the little notification bell thing. And what that will do is when I do these live webinars, you'll be notified instantly and brought directly to the webinar. Super simple. Make sure you get that done. Huh? Eternal Soul says some other dude said 1236. Yeah, so he's just using probably a different pivot or something, 1236. Yeah, mine says 1235. So he's way off, dude. Way off. Okay. But, you know, like, these are not secrets. So 1236. Okay, here's what he's probably doing. Okay, he's just dragging this across. Okay, nothing wrong with that. 1236, that's right there. So you're going to sell there. I'm folding in pivots on top of that, but sure. Yeah, shocking. Rob says, thanks for keeping webinars uploaded. Yeah. As some of you or many of you know, I've been gone for almost a month, 3 weeks, studying Islamic banking at Harvard over the summer. I'm also writing a business plan for a airline, part of my work there at Harvard. So I've been busy the last few weeks, so glad to be back. All right. WTI. Going back to earlier in the week, let's say Tuesday, Wednesday, Thursday, the message was basically the same. You cannot sell oil, The one thing you could do is buy, but you're buying things as a counter trend, really. Okay, I'm trying to find what time frame is best to look at this. So we have obviously up, and this is a sharp decline. This is still an up because if you look left, you drag this across. Okay, that's where we are now. A couple of clicks in here, you'll also see we're on monthly support, and then on Monday or early Tuesday, we were at weekly support. So all I know is you can't sell this. And that's what we talked about on Tuesday and again on Wednesday. And then yesterday we set it up like, okay, if you were going to trade it, you could, okay, you can catch this dip. So let's do this on an hour. I set it up so you could catch a dip off the roll reversal. So I highlighted this area here as one possible, but more importantly, the retracement looks like the next candle actually spiked before the drop, so I didn't get that. So anyways, I have it fibbed here, and the standard operating procedure is something like this. Okay. There's a lot of hope on that one, but I'm a hopeful guy. Do we get these moves in July? Probably not quite the big up move, But what we'll start to see over the next, let's say, 6 weeks, typically is a drawdown of inventory. Okay, and then the 6 weeks after that, you'll see a pickup in demand. And those are two things, right? So we need a drawdown in supply, which over a 6-week period will raise oil prices. And then after that 6 weeks, you'll start to see an increase in demand. Both of those are lagging, right? That's why I'm saying 6 weeks from now, 6 weeks from now. So in this period, we're kind of looking at June and then July, kind of slow, but what you'll see is sort of the driving season of the summer holidays, and then that's why it takes 6 weeks. So by the time that's all done, it's basically September, and we're kind of looking backwards and to say, oh, well, driving season was pretty decent, and then 6 weeks after that, we'll start to get more third quarter economic data. We'll start hearing things about a 4% GDP. And remember, we talked about that 2 months ago, maybe 3 months ago, that we'll see a 4% GDP number, even though we've only been doing 1.5% and 2%. 3 months ago, we were talking about third quarter being 4%. And so when that gets reported, so now we're talking about closer to the end of the year, but when the world finally gets that number, that would probably push up crude oil prices. Yeah, sorry, I can't talk about the startup. Anyway, so a lot to go into that, but long story short, at the moment, it's more buyable than sellable. And then the other thing that we've talked about earlier in this week was the potential at some point for inverse head and shoulders that would bring this down. But something fundamentally big and fundamentally negative would have to occur to kill demand. I don't think we're going to have a supply problem, but anyways. In my economics classes, every time a professor would say endogenous or exogenous shocks, you'd have to do a shot of tequila. I was just thinking, like, what would have to happen for crude oil to form that head and shoulders? Would that be an endogenous shock or an exogenous shock? Well, there you go. Drink. Euro dollar sideways. Yippee! Yeah. Oh, Swiss yen. Yeah, I covered that earlier, but anyways. Oh. I got a question here. Hi, Mr. Wade. I'm from South Africa. I love South Africa. Do you have any courses that you can teach me to trade like you? First of all, I've been to Johannesburg and I taught people how to trade, like me. The second thing you could do is go to tradersway.com, open a live account, even if it's just a small amount, that's fine, but open up the live account and wire some money to it. In a few weeks, I'm thinking maybe the week after non-farm payrolls. I have to discuss it though with the Traders Way executive team, but sometime very soon, I'm going to host a week-long day trading workshop. It'll be probably 5 days, 5 hours, and that'll be free for anyone that has a live account at Traders Way. So I just got to pick a date. Again, I apologize. I've been away for a month at school, so now that I'm back, I have to work out those details. But that's the plan, Stan. So that's the other thing I could tell you. Open a live account at Traders Way, and that'll be coming soon. And then lastly, you can go to FX Bootcamp. There are many courses there. Okay. Sharp, sharp. All right. Well, yeah, let's move over to the yens. Lord, yen. Pivots, yen. USD Swiss franc. I guess we can get into that. Oh, my pleasure. Someone brought up Swissy yen, so I thought I would cover this since it's an easy one. Okay. Earlier in the month, this was the buy, and that predicted a top here, so you should be done. There you go. Whoever was had a question or a comment about Swissy yen, this is the buy. That's the sell. You're not supposed to do anything else. You should be done for the month of July. Perfect. I love too how the double bottom formed first. Okay. Then the higher high. Does anyone know the secret word? Does anyone know the secret word? Hammock! All right. If you don't know what the secret word is, it's fine. It's just proof. Gee whiz. I look like a bum. The secret word, since it is hammock, it comes from a story. I don't need to tell the story, but it's proof that I've taught this in the past that people know what to do here. What that means is everyone that knows the secret word knows to buy this dip. It's just factual. Okay? And that's that. Now, in this scenario, the target was 113. So we hit that, it's done. Enough said. The bottom is pretty obvious here at 111. So it went up a couple hundred pips. Not bad for July, actually. Especially, Swissy and yen. Typically, you don't trade them together. They typically, I guess I can't. I'd argue that they're both risk-on, risk-off type pairs. They're both funding pairs. But you can see they do move. So, I don't know. Okay. Joseph, on what basis buy the dip? It's just technical analysis. There's no fundamental basis to it. It's what you, maybe you're pointing out that it, let's do this. That's a double bottom, higher high. So this is a 1, 2, 3 pattern. Nothing fundamental about it. It's just a 1, 2, 3 pattern. On top of that, this on a monthly basis, this as of the 1st of July, Canada Day. By the way, I spent Canada Day with 2 Canadians. It was a good day. On July 1st, you knew based on monthly pivots that that's a buy zone. And if you were to buy it in that gray zone, the target would be this gray zone up here. So you got, when you add the double top 1, 2, 3 to the monthly pivot, swing trade, it's just, I don't know. That's just it. It's irresistible. If you were a bear, you were looking at this area and you would have sold it up high like this. That is absolutely correct as well. But the market disagreed with you, and it would have taken you, a week to break even. You maybe even made a few pips here. But if you're a bull, this is the obvious buy and that one worked. So if you're a bull, you would have bought where bulls buy and you would have made money. If you were a bear, you would have sold where bears sell, and you might have made money, but you probably broke even. And everything else, right? Okay, so that is that. So if bears did what bears do, bulls do what bulls do. If you did anything else, if you did anything else, I don't know what technique you're using. Okay, right? Cool. Let's move over to the Aussie Yen. You see a big drop in Aussie. I'm wondering if this had anything to do with China devaluing their currency a bit over the last 24 hours. Maybe. Okay. Maybe that's a signal China doesn't want to buy overseas commodities like from Australia. They're like, we don't want to buy anymore. We're done stockpiling. So now we would like a weak currency. Because if you were going to buy, you would want to have a strong currency. So now they're in that situation where who knows, right? But other than that, does this look like an amazing opportunity to trade? Probably not, right? Going back to monthlies, this is the obvious buy. This is the obvious buy on July 1st. Once again, a monthly swing. The target for that buy down here is actually way up here. What do you want to call that? 80, is that 85? I guess 85. So on July 1st, no, it's now July 20th, but it's important because it shapes your follow-up trades, right? So a bull on July 1st would have been thinking, all right, we need to get ourselves up here, okay? And then from that, you drop into smaller trade plans and smaller time frames, and you work your way up. So that would have happened that week. The following week, the buy zone was here, and the target was here. So we hit it, and we hit it early in the week, which sets up a counter trend, which gets you down to here. Fine, right? And then the following week after that, the buy zone is actually from here to here, and now it's petered out, okay? So maybe on smaller time frames like 1 hour and 4 hour, that kind of stuff, it's just not really in the game. Maybe the game is something different. Let me get rid of this actually. By game, I mean like who's in control, what time frame is being traded, or what time frame is the market doing their analysis on, okay? So if this was a predicted bottom, and again, just technical analysis, right? If that was truly an M2 buy, an MM2 buy, maybe this is the shorter term sort of retracement target. And then they're going to use this monthly central. So like this monthly pivot to that monthly pivot to this monthly pivot, right? So on and so forth until we get ourselves elevated to the actual high, okay? So maybe that's the next 10 calendar days. I guess it's 11 calendar days, right? Does that make sense? Any questions? So for example, if you thought that was the pattern, do you see how buying earlier today or maybe later today sets you up for next week's swing, which clusters us in next week's bullish target on top of this monthly resistance? Gee whiz. I keep feeling like I'm covered in ads. I'm covered in... No. Anyways. Oh, Joseph, you asked one earlier. Sorry, bro. What? I thought I answered that. You had a double top. I thought I answered it. I thought your question was on what basis did I, the double bottom top part thing. But so, anyways, so what I'm trying to express here is is that you could be putting together next week's move. Next week's move is supposed to be here like 82.5 to 84 to 84.5 maybe. So let's just say 82.5 to 84. But you could set that up on Friday and see if you can get this move, okay? So you're planning next week's trade today, right? You want to catch kind of in this move here, if that's what you want. Now, you can see it's dangerous now because this is a lower low relative to that. So you got to still plan out your trade. But if you see an opportunity, right, down here, 82.5 might be an interesting buy zone, but it might have already happened because of this move and that move. Okay. In a channel, let me see that. I typically don't channel things. Yeah, well, I have this. Okay, yeah, sideways channel, right? But we're trying to plan a potential breakout really next month, but we're trying to plan it now. Okay. USD Yen, this was really difficult because it opened out of position. So if you're a bull, you're supposed to use the 4-hour 21, and even that really didn't work out that well. So this is much more to do with the dollar and the yen, not necessarily the dollar and the yen, or dollar versus the yen. So I look at this as exogenous drink, not necessarily the trading of this pair, but the trading of dollar versus everything. So if you looked at, like, if you had a dollar index and a yen index, the dollar index was generally bullish, the yen would have been generally bearish. No, I don't know Themba and Frank. Let me try to get this in there. Click. So this is the beast. Looks like this one worked. I don't remember doing this one. Was it Wednesday? I think I was just doing price action. Down, 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 up, up. Okay. So nothing special about this. The only thing I can tell you, though, is this is the conservative target for this week. Okay. Also, this setup Up here, this is the conservative bullish target for the month of July, though we hit it fairly early in July. So that sets up a counter trend trade. When you have a counter trend trade like this, the target is the central pivot, and we're basically, or actually have touched it. So once again, we're at a weekly target, and the expected monthly counter trend target, I wouldn't expect anything more than that. Another way to say it is, I'm not sure if it'll go up. I'm not sure if it'll go down. Everything after this is significantly less predictable. All right. So again, this is the buy zone on July 1st. By the time you got to about the 13th or 14th or 15th, whatever, you hit the bullish target. So this is incredibly predictable. Okay. Very textbook, basic swing trading, okay? Because we hit the target so early, there's a counter trend trade which predicts this. I only teach 2 counter trend trades. That's one of them. Cool. So, like, that's fairly predictable. It's not that it happens a lot, but if you were going to sell it up there, that's what your target would be. And now that we've done both of those, I don't know what's going to happen now. So you should be careful, right? Maybe later this week, or I guess that'd be next week. Later next week, maybe you get an opportunity to trade next month's swing. It's not typically something that I do in July. If it was August, for sure, but July... So I don't know. This one's now more difficult. Going back to this similar thing, and what did we see this on earlier? Was it gold or something else? But anyways, this is set up as a double bottom, right? And then this is a sort of a breakout type trade. Now, a double bottom that has been respected is bullish. And then we get the new pivots. That puts you in a bullish position here, you know. So now you have to ask yourself, are you going to treat this like that? I don't know. Okay. Certainly could come down before going up. I'd rather it hold. But like I said, the predictability of this is now diminished. I prefer it stay above the monthly. Doesn't mean it's going to happen. Oh, yeah, maybe in regards to Themba and Frank, no, I'm not collaborating with them. If they are teaching my course, if they're basically ripping off my course and selling it to other people, either live or in videos, no, they haven't approached me and asked permission. No, I'm not collaborating with them. No, no anything. So if they're ripping me off and trying to make a few dimes, I guess they'll just burn in hell or something. I don't know. I don't know what they're doing, but it's not going to work on the long run. La 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 la. Dun 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 dun. CAD? You guys want to do some CAD? Yeah. I don't know what happens to people that rip other people off. Whatever happens to them, they'll get it. But they better know my stuff well enough to teach it. I gave him a fiddle, but not the fiddlestick, huh? Yeah. So anyways, I'm looking at CAD here, and it's not great. So it doesn't make me excited when comparing them this pair to other pairs. it's mediocre. Okay, this is mediocre. Doesn't mean it's not tradable. What I mean is there's probably better things to trade at the moment. So I have it coming down a bit, but all I'm showing here, guys, is the reason for this top that I did earlier in the week. And then I just further justify this top by a weekly R1, monthly R1. So now it's a cluster of resistance. Here's the cluster of weekly and monthly resistance. And then I say, because it's kind of not going anywhere dramatically, it's not dramatically bullish or bearish, and this, in particular, this cluster of monthly and weekly resistance is so strong, that would predict a bottom of monthly support, which is about here. And sure enough, over the last couple of days, it came down like we talked about. So what's kind of the next move? If you had to be a bear, I would look for a retracement either today or Monday and get this back down to this monthly central. Ideally, the target's down here, but it looks like it'll take a couple of weeks. So I would set up, Monday's trade today. If it did rally up to, let's say, 82.25, right? Or no, that's not 82. Sorry, that's 85. Sorry. 85.25? 85, I don't know. Maybe you drop it down. Maybe it plays off this, so maybe 85 was the number. And in this case, you get a move like this. I'm okay with that. And that gets us down to here. I'd rather it be 85.25, but that might have actually already happened on this sort of hammock roll reversal type thing. But long story short, you're really setting up next week's move. And relative to the other yen pairs, it's just not incredibly exciting. I guess, what else? Any other questions or any other currency pairs? Oh, thanks for the thumbs up, guys. I appreciate that. It's an easy way to say thanks. Oh, yeah. Okay, sorry. Eternal Soul a couple of times asked for USD Swissy. Let's do it. Let's, let me put it on this. Cool. Oh, I thought we did this one. There's the buy zone, there's the prop target, right? So once again, if you're a bear, you would have sold this probably July 1st, and it failed very quickly. But that's where you would have done it. You might have even front run it, right? Off of here. It wouldn't have been a good front run, but you might have traded that as resistance. Okay, that's your call. In that case, you would have been selling at a parity. So that makes sense, right? And whatever. But that didn't work. Now, a bull at the same time is thinking that a bull at the same time would have been thinking this whole area down here, this whole area here is a buy zone. So you might have bought it right at the open on Monday. Last Monday. This Monday was sorry, 2 Mondays ago, right? Okay, on the first day of the month, you might have bought it. A week later, you had your second opportunity to buy it. Okay, both of these are valid. And I usually prefer the M2 over the central. A lot of people make a big stink over the central pivot point. I really don't. It's not, I don't, it's important, but I don't make a big stink about it. I think there are other more important pivots. But anyways, this is the better buy. Excuse me. Okay. If you're a buyer in this zone early in the month, this would have been your target. This is the predicted top. Okay. And that's what happened. Now, because it happened early in the month, like I explained on another pivot or on another pair, this suggests, it doesn't really predict, but suggests if you're a bear, you could sell it with a target of the central pivot. So it didn't quite get there. Okay. Now the interesting thing is this counter trend move was disrupted right here, which is actually this week's buy pivot. So if you were swing trading on Monday and you were a bull, you would have looked at this sort of role reversal pivot, weekly pivot, monthly pivot area as the buy. Okay, so I'm going to leave this here. This is a monthly basis trade. The one I'm talking about now is a weekly basis trade. And, you know, it was expected to head up. All it did was get to M3 and collapse. So right now we have an inside week, which is not good for trading to have an inside week. But there is something going on here on a monthly basis. So maybe we end the week or the month back down in here. But once again, there's probably more exciting things to be doing now. The money in the bank stuff, this was an obvious buy at the beginning of the month. If you're a bull, that's very, very catchable. But you have to be a bull. If you're a bear, you would have tried selling it higher, right? So again, you make those decisions on longer term charts, and you make those decisions on fundamentals. Okay? You got that? So if you're a bull and you think we're going to break out, this is a very, 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 very easy monthly swing if you're a bull. And then, unfortunately, at the end of the week, you should have taken profit because now that's the predicted top. So you got what you asked for. Also, look at the vulnerability here. Okay. So do you think this will pull some bears in? You guys, do you think this top will pull some bears in? Yeah, well, you can triple top it, sure. It's way out there. After a while, it's like, what more do you need? But sure, I'll throw that in there. Why not? Okay, great. Okay, Brooke says definitely. So as a bear now, you can set this up hammock style. Okay. Now, hammock is the secret word to sell the 1, 2, 3 retracement. Icing on the cake here is this monthly pivot. I think that's relevant, isn't it? And then taking that, as mentioned, your first level of support is going to be this monthly move, which we've already gone through. So now you have this double top of a double top of a triple top. You certainly could be taking this down. It might take you all next week, okay? But look at next week's trade. Okay? That's going to get you about here, which is the completion. So I think what might happen by the time we get to the end of July, we will be sitting around this area and we'll have a complete support to resistance, resistance to support move. and by and large, nothing happened, except you got all of this noise in there, okay? And we'll just be stuck at parity for a while, right? You're short at parity. Yeah, okay, so that's this trade, which is great, okay? Right here. Okay, so you got this going on. So at some point, you know, your target for next week is going to be down here at what, 98? Yeah, Eternal Solstice has already closed the trade and but made money, no big deal. But that's where, like, the bigger time frame planning that I show you guys, it's not always just a trade, right? But it should give you confidence in the analysis that you're doing, because the worst thing ever is for you to make a 25 pip trade on a 250 pip move. And you're like, oh, well, I sold it up parity, made 25 pips. Well, a little more analysis would have said either be more aggressive on the scalp, meaning you made 5 or 6 or 7 scalps, because you know this is dropping down to 98. So why would you only make 25 pips when you're selling at parity, right? Your analysis shows you that the move is good for 200 pips. So how could you possibly be happy with 25, right? So you either scalp, every retracement all the way down for the 200 pips, or you sell it and manage the trade so you earn the 200 pips, but now you're not scalping, right? Right? So anyways, that's that. So even if you don't like to trade longer term trades, your analysis should have the longer term analysis so you can validate what your shorter term trading, but also evaluate if it's worth 200 pips in a move. You can afford to sell every retracement on a 5-minute or a 15-minute chart, right? So when you sell a retracement on a 15-minute chart, you're probably in the trade for 2 hours or even 3 hours, meaning it'll take 2 hours to retrace. It's only 8 candles, right? And then when you sell, because it's trending, right? Trending down in this case, then it'll fall for like 12 to 16 candles. Then you'll get to the next level of support, take your profit. And then it retraces for a couple more hours, and then you sell it again. And there's your whole day. But you're not taking 25 pips out of the move. You're taking 50 to 100. Right? Yes, position sizing, money management is always an issue. But anyways. All right, guys. Well, I hope you have a wonderful weekend. Thank you for your time. Thank you for your loyalty. While you're on YouTube, subscribe to the channel. Click on the little bell thing so the next time I do a webinar live on YouTube, you get notified. Please give a little thumbs up, a little likey. It shows YouTube and myself that you appreciate our time together. And then lastly, please visit tradersway.com and open a live trading account. In a couple of weeks, I will be doing a week-long, 5-day training course for all live account holders, absolutely free. And the topic will be how to day trade. Okay? So thank you for all of that. Have a wonderful weekend. Thank you for being in my life. I appreciate you and our time together. I'll see you on Monday. Goodbye.